What's up, guys? How are we doing tonight? And yes, 100% awesome song. I just have to revisit that song once in a while. Just let it run for the full length, right? I am doing awesome. Thank you for asking. Thank you for asking. It's a Friday night. You guys know how we do these. We are chilling, taking it easy. And as we can see from today, we had a beautiful move to the upside, mainly on ES, which of course was our stronger asset, right? So it is to be expected. And the easiest thing to see how we close the month, right? And I do not know if there's a 31. No, there might be a 31, but not a trading day, pretty much. So this is the end of the month of August. On Monday, we will be starting a new candle. And as you can see, we had a huge manipulation to the downside before that move higher, and Nasdaq retraced a little quickly to actually end the month on the open, just slightly above the open, which is pretty crazy. But yes, did close the month way more bullish than Nasdaq, pretty much. We have a beautiful range, 2600 handles, very big range for a month, and we love to see it. But enough jibber jabber about what happened this month, and let's talk specifically about today, right? I'm not going to dive down into 4 hour and whatnot. Why? Because we have our clear higher time frame level, right? We're looking for longs out of this gap to push us higher. This is something we talked about yesterday as well. Same bias, same idea. The move lower was just a retracement, right? I believe yesterday we framed it around, let me just, oh, no need to remove any drawings, just remove the midnight line. There we go. We framed it around our hourly range right here, right? To have a clear discount and efficiency. First discount and efficiency, that fair value gap held on even today after revisiting it during lunch, it did hold on. Now, if we look at early in the day, and I'm staying in the hour, oh, sorry, I'm staying in the hourly for now, there was no SMT until we dive down to the 15-minute, right? And we're going to refer specifically to the 9:30 open because we had, I believe it was 8:30 news. Let me remove the London level because yes, I was trading in London today, thankfully. I saw the big aggressive move off the open, forming the low at a key level. So to me, that was our sign that we can now start going higher pretty much. And if you look here at the just before the start of the London session, there was SMT. It's kind of hard to see with my midnight level, so let me just remove the indicator for a sec. But we did have SMT right here, which frames some London moves. I'm not going to speak on those because that is not what I trade the majority of the time. I just well, I'll give you guys some sauce, some early sauce. I was working on the Rice Statistics app, so I was coding that deep into the night, moving along very nicely. We should see some more updates coming this week or the next week. So it was working hard on that, so decided to trade London. But if we look at it from a New York perspective, what do we see? Well, at 9:30, right here, let me just put the indicator back and actually have a vertical line for New York open. Let's have this. So we have our beautiful vertical line here. Let's actually put that a tiny bit bigger. Oh, that's not how. See, I don't even know how to use my own indicator. Awesome. There we go. Let's put the vertical lines a little more aggressive. What do you have at New York Open? Well, let's have a look at our sessions. We have the London session, which has the low form here and the high form here, if I'm not mistaken, 2 to 5 a.m. So let me just align that. London session. Now, overnight, we have rated the highs of said London session, which is a London raid framework. The idea is that we will visit the London lows. Now, this was my bias for the day, and something I was thinking throughout the day of what I was going to say now is that there was no real bias today in my mind. There was the continuation to the upside, right? Framed from a Thursday reversal with our news, looking for the weekly expansion to be from Thursday to Friday, which is pretty much what ES did. right? Our weekly expansion, our weekly distribution, if you prefer. But NASDAQ was a little bit weaker. So that was one idea. Now, the other idea was just utilizing the framework to determine that your draw for the New York session was going to be London lows. Is there a better one? Is there a worse one? Not really in this case, right? So personally, I decided to concentrate on shorts, but there were still long opportunities, especially heading into that New York PM session. But I never trade Friday pre-AM session because I don't believe that there are any high probability frameworks in the Friday's PM session. It very rarely gives you a range of, what is that, pretty much, let's just call it 200 handles, right? So definitely a big move coming into the PM, to not to be expected, but very nice delivery. If we go down to the 1 minute and concentrate specifically on what happened near the open, well, what did we do? We first went to raid liquidity higher, right? As we can see, and we're talking about short-term liquidity, right? These are data highs at 8:30. This is where we had our news, I believe. I'm gonna go confirm so I don't say bullshit to you guys. But yes, we did have core PCE price index at 8:30 a.m. high impact news. So these are your data highs. You have a clear raid of liquidity here right at 9:30 open. I just want to situate myself, so I'm going to add the vertical line to my indicator here as well. But on ES, what did we do? Well, we did not even go up, so there is SMT as hell, right? And then from the following move, we barely went down, and as NASDAQ was going down, ES was going up. What does that tell you? Well, these are uncorrelated markets. These are not markets that I want to be a part of, correct? This is something we talked about a while, I believe. I don't know if he's in here, but I talked about it with Kaylee the other day in general. We don't want to take part in uncorrelated markets. We want to wait until two very specific things. You're either going to be looking for a 10 a.m. reversal or 10:30 a.m. reversal. And if we look back, zoom out and see, all we did was consolidate until that first initial push down coming at the 10 a.m. open, which you can see from the indicator from this blue line, and followed by that, the 10:30 formed an aggressive retracement, which then led to our distribution lower, getting us to London lows. Let me just mark this out so it's a little easier to see. Coming to London lows afterwards, this was your distribution. This was the move that I would want to take part of. Now, if you longed at any point in time right here, it would have been fine, but you were trading the manipulation. You were trading the daily Judah swing, which led to the high of day at that point before, of course, completely reversing that move on a Friday PM session, which, as stated previously, was to be unexpected. London framework, you have your bias, all you're waiting for, bearish breaker to form. Now you have a bearish breaker that forms specifically with the 956 candle after a very clear open high from NASDAQ right here, NES, of course, from the new 4-hour candle. So you open high, then displace lower, displace below this previous range, giving you your framework, your breaker block that you're looking for an entry off of. But if we look at that breaker block, you'll notice that we are quite far down the range. Now, this is not something that would entice me not to take the trade in general, but it would entice me to take lower risk because we have already displaced, what is it, right? We already moved 75 handles almost at this point in time. So if I'm taking a trade from this fair value gap, right, or a unicorn, and placing my stop with the 3PD array rule, my stop would be at this swing high. Now, since it is lower probability being further down, I would have waited, but truth is, I would have still waited for us to take out this level. So this is just us looking at a failed rise model setup, right? We haven't seen one in a while, visited one, but as I stated, I was looking for shorts, and so that would be a loss in my book. But right after, it gave you a re-entry opportunity, right? So even when you have losses with the setup, even when you have losses with a specific framework, you're oftentimes going to get a re-entry opportunity. In this specific case, I would attribute that loss to the fact that we were due for a high resistance retracement in lower probability conditions. If we look, another unicorn, but this one would now not allow enough risk to reward to a low-hanging fruit objective, which at this point in time to me was the lows formed from the morning initial judo swing, induced by the 1030-ish lows, which also aligns with relative equal lows right here. So there is a key area in liquidity as we can frame in this area. And so the relative equal lows at this low would have been my partial objective before heading to London lows. Now, if we look at the entry with the regular stop loss placement, which means that you have an inverse fair value gap here, your entry fair value gap, and the inverse fair value gap here, you don't have a lot of room to your partial. Now, is 1.32R enough and then a move of 2.86R enough? 100%, right? You're risking $1,000, you're making 2,800. That is always going to be enough, and it aligns also something I did forget to mention. It also aligns with the daily open and the midnight open. Very high probability targets for this specific trade. And if you draw this range, you'll notice that we are nearing equilibrium at this point in time. So that is a key zone where you could look for a reversal. What I wanted to say is that I have a rule when I'm looking at the highest probability frameworks. And when I have a gap this wide, as I stated, I believe it was yesterday, we talked about higher time frame PDRA quarters. I would let it retrace into it and separate this gap into 4 different gaps. So I would wait for the respect of one of these levels and then the disrespect of the level to the downside to give me insight into what's going on. And that came only at this point where we respected the final quarter and then decided to close back under. The opening of the next candle would be the point in time where I would entry. Now, is this the pessimistic approach? Not at all, right? It is not pessimistic to see this perfect entry giving you a total of 9R. That comes through experience, through practice. So for now, if I was to backtest this setup, for example, I would say 1.32R to your partial objective, followed by 2.86R to your final objective, and of course, leaving a runner down all the way to 4 standard deviations, which I'll show you guys aligned beautifully with today. To not say to the tick, I'm gonna plot the values just so we can see the price. We had 4 standard deviations of our breaker range. First bearish breaker to form 19,370.75, and if we look at the low of this candle, 19,370.50. So we went just a tick under 4 standard deviations before completely reversing the daily range and forming a beautiful market maker buy model. Just before we move forward, do we have any specific questions about this setup? I know we have smaller audience tonight, we're chilling, but I'm open to take some time and answer some questions. All right. Well, if we remove these drawings then and move forward, as we saw 4 standard deviations, that can be used as a point of interest. And then of course you have a complete reversal. And as I always say, why would I speak of this reversal where you just got out of what would that have been, right? If you shorted pessimistically, you got out of almost a 200 handle trade. Why would I consider taking longs at this point? The truth is, I would not. But if I am trading the PM session, now I'm going to remove midnight opening price and daily opening price for now. If I'm considering taking a long in the PM session, it will be based on one of 2 things. Either a lunch trade, which did not occur, right? Because from this point on, I was bullish, looking for upside. I did not trade this, but I'm saying if you were looking for a trade at this point, it should have been to the upside, and you had no clear lunch trade. You took out both sides of the early onset lunch range, early during lunch, and then consolidated into a retracement. I would be waiting for 2 p.m. power of 3, right? These are the only 2 frameworks I allow in the PM session, and the lunch rate is not present, but I can look to frame a trade on the 2 p.m. power of 3. If we look, we had SMT present from the time we broke this swing point, right? If we look at ES, this is equal, actually. Equal is mitigated for the most part, but, well, for the most part, I utilize equal as mitigated, but there was SMT that also formed a tad bit later, if I can find it, or tad bit earlier. Yeah, basically, this was associated with consolidation. because there was SMTs on both sides of the range. But ES being equal, NASDAQ being this much lower, could be framed as SMT. For now, we'll disregard the fact because we don't even need that. What did you do at 2 p.m.? You opened, went to former low, taken out liquidity. Right afterwards, what did you do? Our setup was formed. Breaker block being formed from trading above this high, overlapping PD array, overlapping fair value gap at this level, giving you your entry. And of course, we include the volume imbalance within. And then we look at our beautiful stop, very tight stop loss at this point. 16 handles, pretty average in not volatile conditions, but as we've seen from the past few weeks, actually the last month, we've seen crazy volatility in the indices markets, and it's been amazing to trade. Beautiful little PM framework, right? All low resistance liquidity. I would have justified taking a partial at this level, right? Relative equal highs. And if we plot our standard deviations, this should align pretty well. Well, actually, 4 standard deviations aligns better with that final objective. So this would not justify a partial. Just due to the fact that standard deviations align with that level, it adds up in terms of probability. So you have a clear objective higher. And then, of course, we did flip everything and went all the way to the current day's high, almost reaching, well, almost, I guess, pretty far away, but almost reaching those equal highs. If I go on a higher time frame, it's going to be easier to notice. Almost reaching those equal highs that we've been inducing all week, while ES formed SMT, reaching even further, right? Looking at Thursday's high right here. So definitely beautiful movement today, beautiful opportunities. But as I stated, I would have never considered, first of all, an afternoon Friday trade because they are in general, right, the majority of the time, low probability. And you would have also been just FOMOing to the fact that you missed out on the morning short. So these are the setups we will look for the day. But as I said, it's Friday, right? We're taking it easy. If you guys have any questions, I'll gladly spend the time to answer them. We've only been here for 15 minutes, so I don't mind taking a second. Do we have anything? We tend to not have questions, right? It tends to be pretty clear. Always clear, always clear. Well, appreciate that, Justin. Thank you, brother. Then on that note, I'll wish you all a great weekend. We'll see each other on Sunday for the weekly outlook. Hope you have a great weekend, right? Take some time off the charts. Take it easy. And Justin, you better be backtesting, brother. I want to see more of those examples, all right? You guys have fun. Have a great night. Have a great weekend. We'll see each other on Sunday.